Welcome to the Q2 Outlook for Energy Markets in conjunction with Trackstar, Investing Channel's proprietary technology that tracks and analyses financial professional investment research. While a reversal of recent oversupply is likely to underpin oil prices, their high sensitivity to OPEC cuts is set to continue as the US plays an increasingly important role in global supply. Another factor that is worth keeping in mind is the recent Chinese economic stimulus program, as it will likely be a positive price driver for commodity prices throughout 2019. Now, as OECD oil demand reverts to a structural downward trend, global demand is driven by China, India, and the rest of emerging Asia, meaning big concentration risks exist. Additionally, the slowing but growing global economy may underpin range-bound crude oil prices. Looking to natural gas, storage stocks are at record highs, following one of the mildest winters on record. On the back of a much-anticipated global liquefied natural gas glut, supplies are expected to remain healthy into Europe through the 2019 summer, especially given extended low Japan-Korea marker prices and weak Asian demand. Europe is set to continue to play the role of global gas market balancer with its liquid trading hubs, spare LNG import capacity and fuel switching capabilities. Finishing with a look at the carbon markets, the pending impact of the UK's withdrawal from the EU. ETS is overshadowing other factors in the short term. The continued extensions of the Brexit process has prolonged uncertainty over whether UK emissions will be regulated by the EU ETS in 2019, which could present some binary outcomes on the price action. Let's take a look at the technicals. Starting with Brent crude, we have had 16 weekly gains after a couple of minute pullbacks after a morning start reversal in late 2018. If price is going to progress further, we need to close above the 50-period moving average. Volume appears to be declining, however, which is not bullish for the price action. Moving to West Texas inventories, the outlook is understandably similar, but has already closed above the 50-period moving average. Momentum looks to have hit a resistance level below the overbought territory that held through most of 2018. Looking at natural gas, we can see that the selling climax has completed. It is extraordinary to observe how a market breaks out of a tight range on heavy volume, in this case breaking aggressively to the upside and then reversing straight back down to where price action currently sits below the 200 and 50-period moving averages. Finishing with carbon, let's look at EUA emission futures. We can see higher highs and higher lows in a nice smooth uptrend, with the 50-period MA acting as support below the market. This is classic bullish looking chart.